2025 was a big year for DTCC in the digital assets space, including the receipt of a no-action letter from the SEC in December after a DTC tokenization service and much more. With me is Nadine Chakar, Managing Director, Global Head of DTC Digital Assets, and who joins us for our Markets on-Chain series, brought to you from the Global Blockchain Business Council. So welcome, Nadine. Nadine, let's just start with the basics. So what does DTCC do exactly?
DTCC is really the backbone of Wall Street. We were established some 53 years ago, give or take, by Congress to, at the time, deal with what was called the paperwork crisis.
Okay.
So this is at a time where stocks were booming and you had messengers going up and down Wall Street, but the trading became so much. Firms also realized that they were all doing redundant things, so they got together and created DTCC. So, in a way, we are being true to our mission as we push forward with tokenization and other digital assets today. What does DTCC do? We do three main things, right? First, we clear and settle. We are also a depository, and we manage risk. And those are important elements. In order to maintain the safety and the liquidity depth in the United States, we clear, so if you look at fixed income clearing, we're about $11 trillion a day, give or take. We do the same with what we call the SEC. And what that means is we're the middleman. We're the buyer for every seller and the seller for every buyer. So those trades are never going to fail. On the clearing and settlement, we make sure that all the elements of a trade are correct, so you can settle that trade. And lastly, as a depository, we talked about direct and indirect model, but we hold the electronic records, right? We're the record keeper of the U.S. market. And we provide something called a good control location. And that is very key now as we evolve into a digital setting where if somebody issues 100 shares of IBM, you want to make sure that there's only 100 shares of IBM, not 101 and not 99. And that is the role of what DTCC does. And then there's a lot of other things like asset servicing and like we pay the dividends, we process trades. So we're the force behind all the trades that are happening right now on the floor of the New York Stock Exchange and others. As I said earlier, we have about $100 trillion in assets. I mean, the numbers are breathtaking. We settle about 4 quadrillion that is worth of settlements in a year. When I first joined DTCC, I actually had to look up quadrillion. It's 15 zeros for anybody cares. But that's what we do. So we're probably the biggest financial institution nobody's heard of. And we really keep the U.S. markets operating as they should.
Let's dig into this asset tokenization effort and what is next for DTCC in the industry.
Well, we got the no action letter, which simply allows us now to have regulatory approvals to move forward. And we are really busy right now getting ready. So we're hoping in the second half of next year, we will start the service for our participants. We will also, and what does that mean? That means any participant can reach out to us and ask us to tokenize their assets, which we will then deposit in the wallet of their choice. Our aspiration overall is someday to tokenize all $100 trillion of DTCC assets. For right now, we're starting with a smaller subset of that, as you can imagine, especially where we're sitting, right? If there's a mishap at DTCC, all these guys here suffer from that. So we've got to be very careful and cautious on how we proceed. So we're going to start with a subset of that universe. Now, you would say, okay, you guys have tokenized all that, so what? Then the so what here is twofold. One is we are partnering with a lot of different L1s, blockchains, and L2s, which are also derivatives of that blockchain. So we can allow people to move their assets freely wherever they want it to go. But when you think of the true use case of tokenization, it's all about collateral. It's all about liquidity. So we also hope by next year as well, we will release what we call our collateral app chain, which will allow people now to start to move collateral all over the world at the speed of the network, and that we believe will enhance and remove friction from the market, release capital and make our markets a lot more efficient from a liquidity perspective.
So let's back up for a second and just explain what this means for just the economy, investors. This really opens up a whole new avenue of investing in financial assets for people.
Absolutely. It spreads goodness across the board, and I don't want to oversell it, but first of all, we do have the biggest and most liquid markets in the world. As legislation progressed throughout 2025, it gave us a framework where we could start to take these assets. And DTCC has been very, very careful on the way we tokenize these assets to make sure we don't fragment liquidity. So if you're taking a share of Apple, that Apple share in traditional form or in tokenized form will have the same CUSIP, which is really important, so you don't fragment liquidity. To your point, another attribute or a feature of a token is you can fractionalize it. So and I'm not advocating that you do that, but you could take a tokenized mutual fund, you can walk into Starbucks, and you can use that to pay for your latte. So you can fractionalize that share. And by the means of fractionalizing it, you make assets that have been historically prohibitive for people to invest in, take any private asset or a building or what have you.
A painting,
anything could be tokenized, right? But because you could fractionalize it in smaller units, you democratize the access to others. So it makes finance a lot more affordable. It should make it more cost efficient. So investors tend to keep a lot more of their hard-earned money. So there's a lot of goodness that you spread. And as you know, the velocity of that moves, it will move now at the speed of the network, which makes it accretive across the board. So we're very hopeful that this will get good reception as we start to roll out.
Completely change things. And I've been hearing talk about tokenization for years, but what happened? What was the pivotal event that finally, I know Larry Fink is kind of on board now, and what happened that now it's all of a sudden becoming a reality?
I think it's a couple of things. First and foremost, it's regulatory certainty, right? So in July of last year, we had the Genius Act that passed. That was a massive boom for stable coins and all things being stable cash. The regulatory certainty has been helpful. Our regulators have also been more responsive and collaborative, if you will, working with industry to try to move these. So that's been phenomenal. As you know, the SEC had the Crypto Task Force, who have been really instrumental working with us and others to help move the agenda. So that's one. I think the second thing, you mentioned Larry Fink, so you look at the likes of BlackRock, JP Morgan, Apollo, some of the larger players, Franklin Templeton, WisdomTree. Now you're seeing serious institutional investments moving into the space. We're not talking about speaking points anymore. These are proof points. We're putting product in the industry. We're creating demand. We're seeing liquidity. So it's no longer like, we're not quite sure. We've proven the technology over the years. To your point, it's not new. We know the technology works. We've got a good regulatory framework, and we have client demand. When you put all that together, you create magic, and that's where, our tokenization efforts are moving now.
And that brought us to where we are today. So now, there's been some debate on direct versus indirect tokenization. So what are your perspective? I guess explain what the difference is and what's your perspective on that.
That debate isn't new, right? It exists today. So investors have a choice today. They can use a DTCC model where we're holding the entitlement, or they can use a direct model, which is an issuer model, right? So that has existed forever and a day. It will continue to exist. Nothing changes there. With our model, I'm going to focus on our model because I can't talk too much about the others. All I can say to you is they will coexist. But under our model and the way we've tokenized our assets, we've taken a compliance-first approach to this. So the original asset is encumbered at DTCC. And what we do is we create a digital twin that then we can, it could be transacted anywhere, anyhow, as long as it complies to regulatory and security attributes that are important to DTCC and to the market, right? So those are important things. But the good news here is we know these tokens and these wallets are clean because we'll whitelist them. We'll continue to do KYC AML checks on them. We will do OFAC screening. So you could do all that. Do you really want an investor to think of corporate actions, think of proxy voting? So these are all services that a DTCC model will provide. A direct model, there's nothing wrong with that. It goes directly from the issuer to the investor. But it's a false narrative to say that it's a direct line. There'll always be some level of intermediation, and that's not a dirty word. It's these people provide services that are important for the safety and the scalability of the financial market. So that is the debate that's raging right now because people felt, oh, all right, well, we'll tokenize and we will hold the assets. We could still do that even under the DTCC model. When we strike that token, you can hold it in a self-custody wallet. Nobody's going to prohibit you from doing that. So the model that DTCC is rolling out in our entire, ethos agrandis is we want to be totally open, which we are. So we will work with any blockchain. We'll work with our participants, big tech, fintech, as long as they can make us comfortable that the security and the resiliency is there. We will support the asset classes, obviously, that we currently have custody of. And we'll work with various blockchains, various wallet providers. We believe that will help increase the velocity of both tokenization as well as capital.
Okay, so we've talked about tokenization and ideas whose time has come. There must still be challenges, though. Like, what do you see? Of course, right? They never end. So
there's always challenges. That's what makes life fun. Even with all the great things I talked about, there's the reality of implementation. If you look at all our member firms, you look at any fund manager, right? Like there's a lot of legacy systems and infrastructure out there. So we've been very thoughtful about that. There's a couple of things that we know to be true. Not everything will tokenize, right? And not everything will get tokenized at the same pace and rate. So the old and the new have to coexist together for a long period of time. And this is where DTCC's mission has been to ensure that we treat the new assets with the same quality of care as we do with the old assets, right? So ensure investor protection, corporate actions, proxy voting, all that good stuff. We also got to figure out how we facilitate our clients and our participants to be able to merge the old and the new together. And that's critical for risk management purposes, liquidity. And you fast forward a little bit, we do anticipate a world where now today, I'm sure if I ask you, you have a brokerage account, you have a bank account, you've got this account and that account. In the future, you'll have one wallet that will host all that activity. That sounds simple because when we try to explain a wallet to somebody, we say, yeah, it's like an account. But it really isn't, right? It's a lot of different things that are in the wallet. And all the systems down here, all the systems within middle and back offices are all coded to run on accounts. And now suddenly we're going, ta-da, there's a new thing. It's a wallet. So there's a lot of work that needs to be done by the industry to figure out how they can lean on these new rails and push forward. So so that's going to alternate a lot of the trading models, the operating models, the distribution models. Because what you're going to see is the confluence, if you will, of all asset classes, right? So you're going to see it's going to be really hard to distinguish anymore between crypto and traditional assets, right? Because we're using the same rails. And the work that people like us, Financial Market Infrastructure, DTCC, is we're pushing forward to building these rails. We're building that infrastructure. So to use an end user, it shouldn't matter, right? It shouldn't matter what rails we use. What you want to know is your assets are safe. What is the value of the assets? And that you've got full legal ownership of those assets. And that's the path we're working towards.
Now, you mentioned the Clarity Act.
Yep.
Anything else regulatory, legislative that you're keeping an eye on this year?
There's certain things that would be applicable to us that we will continue to partner with our regulators and pushed us forward. But we're very excited about the future, and the future is definitely digital.
Okay. And you talked a little bit about having a wallet and all of your accounts are in there. I mean, how do you see this affecting the end user? My mom, for example, or, how will this affect the average person? How will they interact with blockchain and digital assets?
It will be gradual. I mean, that's a great question. Be very, very gradual. To your point, my mom too, she's 82. When somebody sends her an email, one of us or my brother or sister have to answer the email, right? So she wants nothing to do with it. But I think as it will just get embedded and become part of it. Like, would you have said a couple of years ago that we would exclusively use Apple Pay or Venmo, right? So it's just an evolution of things that we have today. And what are they? They're actually wallets, right? And we will continue to. So it's not going to be a total revolution where you throw out everything and you're now faced with new things. It will be evolutionary as we get there, and it will be habit at some point. Your broker will send you your wallet statement versus the thickness of documents as well, every transaction and all that. So there's a lot of education that needs to happen, and that's where the GBBC and firms like DTCC as well. In addition to doing all the work, we believe we've got an obligation to educate and help clients get through that digital path. And we've been doing that. We've been partnering with yourselves as well. And there's other things we didn't talk about around standards that you've been very engaged with, we've been engaged in. There are also standards around messaging, standards around data. And so there's a lot of work before your mom and I have to worry about just having a wallet.
Well, she just learned how to send a photo on text. So,
You're a lot way ahead of me. So that's a good thing.
Well, thank you so much.
My pleasure. Thank you.
I really have thought tokenization was one of the most promising aspects of blockchain. So it's wonderful to see progress there.
So
yes. And thank you for being part of our Markets Unchained series.
I appreciate you having us here. So thank you.